All right, hello everyone. Welcome back to the channel. This is Day Trading Futures with JD, and I'm JD. So, I know a couple of videos ago I was talking about my new strategy, and I kind of I think I'm ready to break it down and kind of share my strategy, my new strategy that I've been working on. It's not anything really new, but just some of the things that I've been kind of playing around with, and it's catching pullbacks, and it's pretty good with also getting in at a good time just in case there's a reversal. But of course, you have to kind of watch and see how the price is moving if that's the case. So anyway, obviously, this strategy is the same strategy that I've used to pass the Apex Trader funding evaluation, and the same strategy that I'm using with the Elite Trader funding 50,000 account. I've been trading the ETF evaluation. This is my first week, and it hasn't. Not because of the strategy, but there were just a couple of days I didn't get a chance to place a trade, and plus it was over the holiday weekend. So I didn't. I haven't been quite as profitable as I wanted to be, but I'm still at about. I think I closed out Friday at about 1,000 profit. So of course that's only evaluation. All right. So anyway, I'll get into the strategy here. So the strategy is, this is just the 20 EMA and the 50 EMA on the chart. And the whites in the 20, the blues in the 50. The stochastic here is just at default settings. And then I have a divergence indicator here. So the rules for this strategy is, of course, I don't trade the open, the New York session opening. I usually wait for about 30 minutes to an hour. And as you see here, I've coded a new indicator. I'm not really ready to put it out yet, just because during times of consolidation, whenever the price is right around the 20 EMA, it's going to be showing a bunch of buy and sell signals. Like a lot of, during most times of consolidation, most indicators are going to have a lot of false negatives or false positives on entry. But anyway, so the rules to enter are: if price is trending upward, if price gets below the 20 EMA, and as it starts to climb back up, you can place an entry when price crosses and closes, the candle closes above the 20 EMA. And the stochastic is below the 20 line on the stochastic, then you can enter a trade for a long. This is on the 5-minute the 5-minute chart, and of course we're on the the Russell 2000 futures. And you can set your stop at the 50, or you can just use your own, stop ratio that you want to use. There's, I like to set a definite profit target, whether it be 10 points, 5 points, whatever the case is, whatever the market looks like. And if I were to see this and see that it topped out right there, I probably would have only set it for 5 points, just because it looked like there was some resistance, looking left. But that's up to you guys. I mean, set it where you want it. There's a lot of different schools of thought, as you know from other videos. I have some different schools of thought with risk to reward ratios. So, all right. So that's kind of the basics with that. All right, then just kind of give another representation of like a pullback. This was a trade that I made when I was still in Apex Trader Funding. This was obviously this is recorded at, or this playback is about 5 or 6 times the speed. One of the things I wanted to show you on the pullback, so we had a lot of strong bullish momentum going up, or with the price increasing. I saw a wide gap between the 20 EMA and the 50 EMA. This was probably this was a good sign to catch a pullback. When price closes below the 20 EMA, there's a high probability on the 5-minute chart that price will continue going all the way down to the 50. Doesn't happen all the time, right? So you got to really watch your price movement. You can use the stochastic indicator to help you weed out false trade signals. Sometimes on the 5-minute chart, price will stop, and I'm would almost be 100% certain. That doesn't make sense. There's a high certain probability that price is stopping right here at the 3 minute chart on its 20 EMA, because it's going to be a little different, right? So, but anyway, the or the 50, that could be the 50 EMA on the 3-minute chart. So I've noticed the 20 EMA and the 50 EMA will offer a lot of good temporary support and resistance on the charts. So when you're catching the pullback, same rules apply. You got to look at the stochastic. If the stochastic is, in this example here, the stochastic would have had to been in the overbought territory, which means like 80, over the 80 mark, in between the 80 and 100. And then you could have placed the entry for a short once the candle or once the price closed below the 20 EMA, and then set your target for the 50 EMA on that chart. Obviously, this is just a scalping strategy. Sometimes you're not going to get 10 points. You may only get, 3 or 4 points. But it seems to me as a good strategy that will help you pass evaluations if you're struggling. It doesn't take much analysis of the charts. You can kind of hop in as soon as you see the entry signals that you like to see. And if you think about it, if you're in a $50,000 evaluation and you want to pass your evaluation in 10 days, your profit target's $3,000. That's only $300 a day. So that's a good probability that you can use this strategy and get your $300 a day, whether you're using one contract or 2 contracts. It's reasonable to think that. Of course, like I said, this really works with a trending market. Whenever the market is consolidating, don't get in any trades. Wait until there's a gap between the 20 and the 50 EMA. And once you see that gap start to form, wait until the pullback, and then you can enter that trade. You could also, from this point here, obviously I'm about to close this trade because I'm moving the stop closer and closer to the 50 just because I just want to get out of it. And I could actually catch this trade on the way back up. If the candle crosses above that 20 EMA when the price is returning up, I could enter another trade as it crosses the 20. And then I could set my profit target just above the previous high. But that's just, if you want to get in, a few extra points, that's what you could do. So tell me what you think down in the comments below. If this is a good strategy, if you'd like to try it, definitely use it on demo or simulation and just see what you think. Again, do not trade this during consolidation. It will not work. So wait until the breakout. Wait until don't try to catch the breakout because you'll lose. So just wait until you see the gap between the 20 EMA and the 50 EMA, and then catch the pullback, or wait and catch it whenever price returns over the 20. All right, thanks a lot, and stay tuned to the channel.